Hello, one and all. It is your good pal Kev, your local real estate expert, and I'm coming back to you with another weekly real estate debrief. In just a couple of minutes, I'm going to teach you about the rates, the inventory, and as always, the 60-second playbook for buyers and for sellers. So without further ado, let's get into it. Starting off with our rate radar. Now, Mortgage News Daily has the 30-year fixed at around 6.34 as of today, which is Monday, November 3rd. This is just a little bit above the Friday recordings, but it's still roughly about 3/4 of a point lower than the same day a year ago. Now, if you're going off the Freddie Mac weekly survey, which went through Thursday, October 30th, it was showing 6.17%, which is the fourth straight weekly dip, according to them. Now, for a little bit of context, I'm always looking at the 10-year Treasury, which is hovering right around 4.1% as of late last week. However, it did briefly dip under 4%, which is a key factor when you're looking at mortgage pricing. Another key factor is that the Feds cut the rates on October 29th to 3.75%, down from 4%, which that doesn't necessarily set the mortgage rates directly, but it does help keep a lid on the yields and the volatility. And lastly, the MBA data midweek even tagged the 30-year rate at about 6.3%, which is a 13-month low and actually sees mortgage applications ticking up just slightly. Moving on to the inventory report. Now, the national active listings actually rose 1% week over week, hitting a new 2025 high at approximately 868,000 listings. It's still 6.5% below the 2019 numbers, but the year-over-year gap narrowed to about 17.9% versus the 2024 numbers. Now, if you zoom out, October actually marked the 24th straight month of inventory growth in the United States, with for sale homes above 1 million for the 6th month in a row. However, pending home sales were pretty flat in September month over month, with only about a negative 0.9% year over year, essentially a pause heading into rate relief. And finally, the 60-second playbook. I am still targeting stale listings. I'm looking for listings that are 21 plus days on market. These sellers are primed to be offering concessions or rate buy downs, repairs, closing costs, all these type of things. This is a really good market for negotiation leverage if you're a buyer. For the sellers, my advice is to price in a lane that you can win in. Buyer demand is still cautious. You will want to match recent comps and pre-offer incentives by competing listings rather than just chasing yesterday's highs and the recency bias of the red line market that we've been seeing over the last couple of years. Also, don't panic and be quick to take your house off the market if it's not selling. Supply is up, but it's still below 2019, which was just 6 years ago. Use presentation and strategic price reductions instead of big slashes early in your listings presentation. And that's it. That's this week's weekly real estate debrief. If you like this video, give it a like and a share. And as always, thanks for watching.